What a crazy week for mortgage rates. Let's cover what happened this week, what's going on, and how you can make sense of it. So here's where rates are today. These are for people who have excellent credit and are putting a lot of money down. If that's not you, I'll give you my info at the end of this video. Go ahead and reach out to me. I'm a licensed mortgage advisor and financial educator. I'm licensed in North Carolina, but if you're not in North Carolina, don't worry, I can get you referred to somebody in your state. On Tuesday, we got an inflation report. It's called the CPI report, the Consumer Price Index report. And this basically measures inflation. It came out much higher than anyone predicted that it was going to come out. Everyone was talking about that it was supposed to be lower and they were expecting it to be at a certain number. And when it finally came out, it was much higher than expected. This caused a lot of overreaction to the data. And the reason this happened is because the market got very worried. And they were worried about rate cuts because all this time they've been talking about the Fed was going to cut rates in March. They're willing to cut rates in March if inflation stays under control, which has been trending down for the past few months. But after this report came out and showing higher than expected inflation, now those talks about cutting rates in March are off the table. Now they're even talking about cutting rates in June or July. So that was on Tuesday. The next day, the Fed chair from Chicago comes out and he does his best to try to calm the market down. And he says some things, hey guys, we're not looking at that data. We're looking at something completely different. And he tried to do his best to kind of calm everyone down and not have a market overreaction. And it did work for a little bit. But also what came out on Thursday is the retail sales data. So the retail sales data came out completely opposite. It said that it had lower than expectation numbers. So what this basically means is that there has been a drop in spending. That could mean that people are using up all of their available credit. Over the past few months, there has been a lot of promotions for buy now and pay later. Well, now those payments are due, so people don't have as much money to spend in the market. And that's why you're probably seeing the lower retail sales numbers. Another thing that this shows is economic weakness. When people aren't able to spend as much, that shows the economy is slowing down. It's not expanding. And then we got the report for the jobless unemployment claims. This is for people who have lost their jobs, are on unemployment, and are continuing those claims. And that rose in a week by 30,000. So people who are out of a job are continuing to stay out of a job and use unemployment. I would say one good thing about the numbers is that we're in a market with lacking housing inventory. And the builder sentiment to start building homes did increase by 4 points. So that's the highest that we've seen in a few months. That builders have confidence in this market to start builds, which will help alleviate inventory issues later. And on Friday, we thought we were going to get some interest rate relief with the PPI report. This is the Producer Price Index report, and this measures wholesale inflation for goods and services in the US. So PPI measures wholesale inflation and CPI measures consumer inflation, and both of those numbers came out higher than expected. The PPI numbers were terrible. So what does that mean? That means inflation isn't coming down as much as predicted, and rates are going to stay higher for longer and may even rise. And like we talked about earlier, these rate cut discussions that were expected in March and now June or July, we'll have to see, what the data says in the following months for inflation and see if those get pushed back further, or we may even see those rate cuts in June or July. That's what we're hoping for. But if inflation continues to persist, then that's going to get pushed back even further. So I know all this bad news this week, but it's not that bad. I don't want you to think that home ownership is unaffordable. That's what a lot of people are saying. And that's what the media is doing. They're really pushing this narrative that homeownership is not affordable and not available to people anymore, but it is. You can afford a home right now in many, many states, if not all of them. Go onto Zillow, type in your state, put in the filters of, taking off land and different stuff like that, and look at homes in the $200,000 to $300,000 range. And there are many homes still in that price range. They may not be in the exact areas that you're looking for, but within a driving distance, you can still find an affordable home. These homes may not be in perfect condition, but they're still livable homes that you can fix up over time while you live in them and create value in those homes at a very affordable price. Now, we're not talking about places like Southern California or Manhattan, but we are definitely talking about many of the states that you can find very affordable homes in your price range, including right here in North Carolina, so that way you can stop paying rent. What I'm trying to say is home ownership is still affordable. There are things that you will have to do to become a homeowner that you may not have had to do in the past. Things like watching your spending, being intentional with a budget, working extra jobs to get the down payment and closing cost. These are ways people are buying homes right now, including getting gifts from family member or friends to help out with those costs. So who am I and what do I do? My name is Steve Medina. I'm a mortgage broker and a certified financial educator. I help people get financing for a home, as well as educate and advocate for financial literacy. So give me a call if you have mortgage questions or just want to entertain the thought of buying a house right now, but you're not ready. I would love to help you. And if you are in North Carolina and you are ready to buy a home, you can go to www.stevemedina.com, MEDINA, and you can start the application process. You can also give me a call at 919-985-3076, or you can email me personally at stevemedina.mortgage@gmail.com. Hope you have a good day, and we'll see you next week.